I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a guy I've been following for years. I remember the first time I logged into JSMindset.com and started following a guy with the reputation of Mr. Gold. He's very deep trading experience, very deep gold experience. He's one of the absolute best financial people in the world. We were supposed to have on Bill Holter, but he couldn't make it today. We had a little technical problem. But Jim Sinclair, thank you for joining us today on USAWatchdog.com.
Happy to be here, Greg.
You have been calling for some pretty awful stuff to happen in the economy. That the wheels would come off at some point. I don't think anybody saw the Corona pin but we all knew there was a giant bubble. I want to start with what's your appraisal of where we are right now in the economy that you so aptly predicted was going to turn ugly at some point? Where are we now?
Well, what we've done in a fortuitous manner is stopped the general demand for money. Something was going on just before the virus hit. And please don't misread what I'm saying, but the virus in one sense is awful, absolutely, of course, but it also was quite convenient because in the repo market, we were supplying up to 350 billion or more a day to be able to keep the interest rates from rising significantly on the short end. And of course, all levels of interest rates affect all other levels of interest rates. Now, at the same time, the euro dollar, which is not the euro dollar is dollars in Europe on deposit, period. And they are in Europe similar to the repo market here, very short-term lending area of liquidity. And the euro dollar market was starting to show signs of the same crisis that was happening in the repo market. And the virus, as horrible as it was, came at an absolutely fortuitous point of time from the monetary science standpoint. We were about to have a major monetary collapse, worldwide, global, at the time the virus started. Now, there's two ways to take care of a short-term lending market. One is to pump in as much money as you can to meet the demand and therefore keep the rates from rising. The second way, and more effective, is to stop the demand for the money. And the effect of the coronavirus was literally to shut down business globally and therefore shut off demand for loans, which also shut off demands for short-term money. So what the public is not seeing, not considering, does not understand, is we were stepping into the door of a major financial crisis, magnitudes larger than what happened in 2007, 2008, 2009. So it's a horrible thing that this virus occurred, but it's a fortuitous thing, because if it had not occurred, we would presently be in a crisis much more serious than we experienced in 2008. And that's the point people don't recognize.
So you're telling me that the coronavirus and the shutting down of the economy shut down the money. So I understand this.
That's quite
shut down
correct.
the demand for money, and if the demand for money would have kept going, it would have all blown sky high.
It was blowing sky high.
Already.
It was blowing sky high. And so there's two ways to cure that: supply or demand. Now, we have very little latitude in the creation of additional liquidity when you are at zero rates, and sovereign debt, in some cases, below zero. So, and please don't misread what I'm saying. This is not a conspiracy theory at all. It was a fortuitous act of nature, or the escape of the virus from the Chinese lab, or the wet market, or wherever it came from, that it happened exactly at the right time. Because if it didn't happen, we would be right in the middle of a crisis insoluble due to lack of tools and the collapse of the Keynesian economic school, and because of modern monetary theory, which doesn't consider the size of a balance sheet even of the Federal Reserve or the amount of money created to be of any concern whatsoever. So we were in the midst of modern monetary theory and the tail end of the management of perspective economics, which is a market that has nothing to do with the equation of value and worth. So if that had, we'd be in a worse condition now.
So you're saying it would have been worse if the repo market blew up. That's what you're talking about back in September, and the Fed panicked.
It would be a worse condition. You wouldn't have this many million people unemployed, but it'd be working towards it without any real ability to stop it.
So this is like a controlled demolition almost, or a demolition that happened at a good time?
It's a very hard thing to say because, that the virus is horrible, especially for more mature people like myself and anybody with any pre-existing conditions. So we need to walk over this softly, but definitively. And what I'm saying is that if the virus had not occurred at the moment it occurred, we were then in the absolute beginning of a serious debt-based crisis without any tools in the toolbox to be able to fix it. Shutting down demand is all we could do.
So the demand for money stopped the
explosion of interest rates by the coming out of the shortest term lending rates and working their way through the 30-year, or I guess now the 100-year.
Well, now they're talking about zero rates, that the rates are going to go to zero or below zero, and I think some of the other money minds are calling for below zero interest rates. Where do you think this is going now? Where do we go from here?
Well, we are going to make a recovery, of course. It's not going to be a V by any matter of means. The stock market could be a V because the stock market has very little to do with reality. And it has more to do with algorithms than it has to do with economic rhythms. So a quick stop to the figures of the virus would be a very significant stimulant to the market, which in all probability might even give us old highs again. But as far as business is concerned, very serious damage has been done to the infrastructure of the business equation. That is to say, many employers are gone. Many major corporations have significant readjustments to be able to build up again. The supply lines and logistics, where does everything come from? China. We have very poor relations with China now because of the conclusion that they hadn't given us proper warning and information at the beginning of the pandemic. This is a major worldwide adjustment, economically and politically, because of the fact that we've sent our supply lines and supply sources overseas en masse and been invited to, and if not rewarded tax-wise by, having everything made in the cheapest place possible. So that you can't put together your smart computers or your new TVs, or for that matter, maybe your porch furniture, without the supply line having its base in the Silk Road. So this is not something that is a passing phenomena. My opinion is that if by God's good graces this pandemic should come to an end tomorrow or someday soon, the stock market would go wild on the upside, because the stock market is a Potemkin city. The stock market is not what it was in the 1950s or 70s, or for that matter, ever before. It's management of perspective economics, whereby the control of the market is considered to be the control of market psychology consumption-wise. And the figures seem to indicate the possibility of a slowdown. I mean, remember when we used to watch the money figures all the time? M1, M2, all that. We were glued to our screens to see what it would come out, and we trade on a weekly basis. I mean, I may be going back before most listeners were in diapers. However, it's a terrible thing to say. We're now moved by the D numbers, how many died from the virus. And as long as that continues to decline, the stock market continues to rise. If that was to turn around, it would be the opposite. The only thing that's been steady, is gold. And the change this brings about is a continual reconstruction of the basic business foundations. It's a start over. It's not just a slow down, tick back. How many restaurants can make money on 50% of the clients? None. How many automobiles are built up in the lots to be sold? Enormous amounts. How many clothing stores shut down full of winter clothes and haven't even made the shift or been able to financially make the shift to summer wear? And you could go down the entire line. So it will be more like an L with a very sloppy part of an L. I'm sure.
In other words, the comeback is going to be straight down.
No, we've come straight down.
And then we're going to go sideways now.
Yeah, and it's as far as a V is concerned, that would have to assume that there's been no impact on the basic business structure itself. Many businesses are not going to open up again. Rent is going to have to be paid in arrears. Where debts are not being paid, that's the asset of someone else. So in one case, you're, oh, good, we don't have to pay the debt. The other side, oh, bad, I have no earnings. So it just shifts the dynamic from the borrower to the lender and back again. So nobody, in my opinion, really knows what was going on at the time the pandemic started. Nobody understands that if demand was again to rise like a V, you go right back into a monetary crisis with the repo market and the euro-dollar market imploding. Interest rates would rise sharply as a result of that. A sharp increase in interest rates would have the total opposite effect on business conditions. So this is the ultimate rock and a hard place. To get out of this one in one piece will take a great deal of intelligence, patience, and proper application. We're moving from monetary stimulation to fiscal stimulation. And you can expect to see roads being built all over the place. Who knows, maybe even coming in from Kennedy Airport won't look like Mad Max and the day after as you drive through pot craters. Our infrastructure is a total mess. Our bridges are mostly condemned, but still used. And that is the only tool left. And that also will require creation of money. But you notice that there's been a type of merger between the Treasury and the Fed.
Yes.
And everybody seems to forget about that. But what it does is it gives the Treasury more latitude in the process of creating money. So this is a spring back. The cartridge fired will be in the area of fiscal stimulation. And bear in mind, fiscal stimulation is not like monetary stimulation. You do monetary stimulation in 2008, and in TARP, WARP, you name them, money flowed into the banking system to fill up the black debit holes of the derivative. And that's why people didn't really see it, because the people who received the money was the banking system itself. Now, the use of fiscal stimulation is a slower process. It's sort of bubble up rather than trickle down. You do hire many people. Sure, you buy more machinery. Yes, the big companies and the major builders will make a lot of money in this. But the bulk of the money coming in from fiscal stimulation, or let's say a larger part of it, will find its way to the average guy. And in finding its way to the average guy, First, he's in shock right now. He's in a little bit less exuberant about increasing his overburdened debt already. And in all probability, that money will not fly into new boats, new cars, or whatever it is that is not what you need. So what you're looking at is an increasing cost in that which you need: food, medical supplies, medicine itself. The idea of this coming inflation as a result of this is very simple. Everything that you need will go up in price. Everything you don't need is not necessarily going to hold any value, or you're better off with a freezer full of fine cuts of lovely beef than you are with a brand new Tesla. The beef will go up, the Tesla will go down. The economy will not start up in a V, will try an L. However, what becomes the determinant of that? Interest rates. So the demand starts for money again in the normal markets. And when we quit, bear in mind, the reason why we went into such a difficult situation in the repo market, shortest term lending market, mostly U.S. and nearby, and the euro-dollar market, deposits by the banks over in Europe, will start right up again. So you really are in a rock and a hard place. If you could pull off an L, you would be extraordinarily wise and capable and able. But even that is hard to believe with the level of debt we have.
So so good news, it means interest rates would skyrocket, and then we'd get a worse problem.
That's a much worse problem because you can't stop. What tool do you have in the Fed toolbox that you can use? You're at zero rates. What do you think? -1 is going to start business up? No, it's not. Zero rates is not good news.
So most of these people, I'm of the mind that a lot of these people are not coming back to work. What does the world look like when you lay off 33 million people?
Don't have a job, man. I mean, put it this way: those who can will. It's not a question of being lazy louts because they're getting a check for $600 in unemployment. It's a question of, is the job there? And the answer is, no, it's not there. And even if it was, it will come back slowly, as our scientists and politicians gauge the D number. Is this pandemic being accelerated by a return to a normal economic activity? Because if it is, they'll shut it all down again.
Oh.
You have a choice. This is the most unusual thing that's happened in the world. The Black Plague was easier. This is what they don't tell you about this is that 8 out of 10 who go under the respirator don't live. And it's a horrible death. You choke to death. And on top of it, you have very serious problems in blood clotting and other very important parts of life as a result of this type of virus. This thing is really quite awful. And and if it hadn't happened, the economy would be in a shamble as we speak right now.
So, a lot of people would say it's a shamble right now, but you're saying it's less of a shamble than what it would have been.
It's less, and it's controllable.
Oh man, how do we get out? So if we rev it up too fast, interest rates spike and it destroys.
If we rev it up too fast, we won't get a V. We'll get more of a straight line down.
How do we get out of this?
It's a difference of clogging and toe dancing. Okay, the ballerina economist, who is not overcome by the recent modern monetary theory and the thought that Ricardo and von Mises and Smith are all nuts. Respect for economic law, because that's what's happened, even if it had been delayed by management of prospective economics, a game of psychology. Psychology is not the basis upon which businesses are built. Psychology is, of course, extraordinarily important, but you have to have good investment foundation. What do we do over here? we make derivatives, do some services. Where is everything manufactured? Not here. Where are our logistics lines of supply? Not here. What are we doing with China right now? We are playing economic war. We are in economic war. But I'm not suggesting for a moment that the virus was a weapon of that. I'm just saying by circumstances and timing, they have become one singular problem.
You said at one point, Jim, that and Bill too. I'm so sorry we didn't have him on today, but you guys said that Trump was going to be overseeing the biggest bankruptcy reorganization in the history of the world. Is that what do you still think that, and why?
Well, he is a master at bankruptcy. Okay, Mr. President Trump, in his business career, has used bankruptcy and has exited bankruptcy with a great deal of finesse. And it's not something that he's unused to, nor is anybody in his prior business unused to. However, if I had to pick anybody who knew how to do it, I would say he knows best, because that's a balance sheet problem. And what you must do is get rid of that which is bleeding you. You have to get rid of that which is a liability. You have to build up your asset in order to work your way out of bankruptcy. Now, that's very much a part, in my opinion, of the coming change in what's called money, currency, and that which holds true value, purchasing power over significant periods of time. So this entire equation fits right in with what Bill had been saying about Trump overseeing the bankruptcy of the global bankruptcy, out of which is going to come two resets and the possibility of a new long-term positive economic environment. The period of time during which this would take place is, as I said, remember I mentioned June of 2020 when it really started to show, and 22, 25 periods of crisis, end of the entire experience, 2032.
Well, let's talk about gold. So, the way you're talking is that this is better than what we would have had, but gold is still up $400 year to date, or $450, or it was $1,200 not that many months ago, and now it's 17 and change. What's going on with gold? A lot of people are asking, what about gold?
It's not the traditional reasons at all. Even those who know gold very well are very much stuck themselves in their definition of inflation, the semantical argument with their definition of deflation, with what hyperinflation really means, what the result of over much debt historically so means, what the merger of the Treasury and the Fed means, if they even know what happened. Gold has a very big role to play in this, and one should assume that the gold that the United States claims to have, they have, because you're never going to know anything different. If you audit yourself, it's not an audit. So whatever they say they have, it's better when you do the numbers to consider them having. Now, in 1972, I think I put an ad in Barron's for gold to rise to 900. And in 1980, we got to 887.50, which is about as close as you're going to get. Then after that was over,
And just so people know, when you said that, gold was at what, $40 an ounce?
$230.
Oh, $230. Okay. Oh, it's already gone up. 72. We had already come off the gold standard. Already gone up. Okay. So $230 to $900 an ounce is a pretty big move.
And then after the 900, or fulfilling of the price, we had a period, a lull in gold, where it returned, but not down to where that move started. And I then publicized that within a linear period of 10 years, the price of gold would rise to $1,650 or better. Now, you might say, well, how did you come by that? And I'm certainly not Karnak the Magnificent. A very simple way to do that. Gold is an asset on the balance sheet of the United States of America, as an asset behind the then used reserve currency.
Incidentally, just so people know, you hit that number. You hit it within 4 or 5 months. You hit that number.
Yeah,
16.
well, I hit the number stone
You did hit
on.
you hit the number within 4 or 5 months.
It did overrun and then came back down, but 1650 was extraordinarily important.
Okay, go ahead.
900 was extraordinarily important, and nobody had to be Einstein to figure it out. All you needed to know is what was the total debt of the reserve currency, what were the total assets of the reserve currency, times the price of gold to equal the same. Gold balanced the balance sheet at 900, and gold balanced the balance sheet of the United States at 1650. And I challenge anyone watching to do the math themselves. It's just that simple. Take the amount of gold that the United States says it has, take the amount of debt that exists, U.S. debt, and find out what price of gold would be for the two to balance to zero.
What number is that?
Well, I said this to you before, and the articles came out suggesting that I might be having a senior moment.
Yeah, well, we know you're not, so what is it?
Low end, 50,000. True price, 87,500.
I know.
And a reset in the currency system, and a new currency, which will only be traded between central banks, which will be a Cipro currency, but not anything anybody else can buy and sell. Gold will act this time not as a convertible item, because anytime you make gold convertible, you know what happens. It converts. And that screws the system up one more time, maybe 20 years later, but you know it's coming. Now, this time, I explain it this way. Melania Trump, a beautiful lady, walks into a ball in London for the Queen or something. And every eye turns around because she is extraordinarily beautiful. Then, you know that comedian that was on Saturday Night Live, the little lady with the pocketbook, she used to hit everybody over the head with it? She walks in.
Oh, that's Laughing. That's Laughing, Ruth Buzzy.
Yeah, and in she comes, and she's dressed like usual, okay? Not too well. And she's got that pocketbook and dragging on the ground behind her, except she has the Hope Diamond around her neck. Everybody stops looking at Melania at that point in time and can't get their eyes off this sparkling piece of jewelry that's on this little old lady with a pocketbook dragging on the floor. This is somewhat of it's not silly. It's trying to explain without going into deep monetary science, the why. That this time the country with the most gold will have the strongest currency. It will be looked on like the Hope Diamond around the common share of the country it represents, its currency. This is why China and Russia have had a political policy to accumulate as much gold as possible. That's not an investment, Greg. They're not looking to sell that at 3,500. Okay? They're looking to rule the roost. They're looking at that to shift economic power to them. We are at economic war right now with tariffs, with whatever we might do with the Chinese as an impact of really their poor behavior and not letting us know that a person-to-person terrible virus was spreading throughout their country. And had we known then and locked down then, we probably would have saved many, many lives. That's a fact. It can't be run away from. And, we're going to react. I mean, more people have died in the United States in the entire Vietnamese war. I mean, that's horrible. And that's just here. That's not even considering what happened in Italy or Great Britain or anywhere else. So to be a little bit angry at not having been told the entire truth, full disclosure, about the pandemic virus, and the fact that all airports in China were shut down except Wuhan. So the Wuhan continued to fly all over the world. Well, It did not fly to any other Chinese location.
Yeah, that's a fact. You got you.
That's a smoking gun. Okay. Yeah. So I would say if there is anything here they didn't tell, they tried to cover it up. I'm not going to suggest anything else, but we are at war. And how we react to this is going to be very important because bear in mind, that is our logistical line of supply for this computer, for everything you have in your house. We've turned all manufacturing over to China, all. And if China was to shut down or have their own economic problem, our supply line would go flat. At the same time, we're seeing over here that our supply line, as Bill and I have discussed with you many times, when you get into a situation like this, be it monetarily or by national emergency, the first thing that gets hit is our ability to ship products to the market. There's plenty of beef around. There's plenty of pork available. But you can't have fellows who are, or ladies who are slaughtering this and preparing it for merchandising, standing shoulder to shoulder in very bad working conditions. And there are only 4 plants that are major. One is owned by the Chinese. Another one is owned by Brazil. 2 are owned by U.S. entities. That's the 4 meatpacking plants biggest in the United States. China owns one of them. So you mustn't take this lightly at all. You can't have a V recovery without a debt explosion that was starting to happen already. The market could easily have a V recovery because the market is run by computers which have neither fear nor greed. They react to numbers. They react basically to many different kinds of momentum studies. So you can start the momentum in anything, and the next thing you know, Tesla's 1,000 from 500. Why? No reason, just the algorithm. So this could happen across the board with those stocks considered now to be the leaders, even though to explain that in a value and worth term is not possible. So we are between a rock and a hard place globally. The move towards globalism is a spider's web of derivatives. And those derivatives are all tied into the cost of money. So if you tightened up your repo market again and your euro-dollar market, both which were in the process of implosion, would have said rates all across the board higher. That still is there. However, the demand for money obviously isn't because you shut down global business. Now, how you pull this one back will be an artistic as well as scientific exercise. My only concern is, do we have those capable? And it will be a form of bringing the world out of a bankruptcy situation without kicking it off one more time in the money markets.
Is there going to be a jubilee? Is there going to be an implosion? Is there going to be both?
Are the students paying their loans?
No.
Are money going out from the government to pay salaries of the unemployed, both by unemployment and also by special grant?
Yes.
The point is that the system right now is being held together tenuously, and we already have jubilees. If you don't pay your rent, you have a jubilee. If you don't pay your student loan, you have a jubilee. If your automobile insurance is postponed, the payment thereof, you have a jubilee. And we got a jubilee after jubilee after jubilee. It's almost as if the Bible is correct in terms of economics. So the jubilee is out there, but bear this in mind too, especially to our listeners. One man's jubilee is another man's disaster, because the people who aren't being paid are being hurt very badly. And the people who aren't paying are being helped get through this most unusual, if not first-time event in modern world history.
Oh,
So bringing it back, it can't be by just telling everybody it's coming back. It can't be by big PR and MSM that everything is going to be wonderful and there's nothing to worry about. It has to be well thought out. And the bankruptcy will take place in the form of a change of currency system and a change in the role of gold in that currency system, very akin to the basic thesis of free gold. But like all other theories, they turn into a religion, and in economics, you can go wrong very easily. But what we have is two resets. One by the elite geniuses, involving a separate currency for central banks, only traded by central banks. And that was the purpose of letting all these Bitcoin and things go on, to raise it up the flag and see how it worked. And you will have a significant change in the role of gold within that equation. Think about it. If gold was a barbaric relic, why would you keep it? If gold was a useless thing of the past, why in the world would China and Russia be buying as much as they could get a hold of? Unless they intended to be the important economic factors of the next 50 years or more.
Is gold going? Go ahead.
No, so I'm saying that gold's natural role has always been in the fiat currency system to balance the balance sheet of the country considered to be the country of reserve, the US dollar. And my ability to predict where gold was going wasn't, as I say, Karnak the Great exercise with the hat on, but it was a simple piece of mathematics. And that simple piece of mathematics, as outrageous as it sounds, will work again.
Does gold, does it go up like it's been, scratching its way up now from, it was a 1250, it was at a long time, it went up to 19 and 11 and then down, and then had this long trough, and then it's been crawling up in the last few months, $400 or $500.
What you're seeing, because of the reset coming, is a transition to a new matrix of how gold is valued. Right now, gold is valued by paper contracts. Two parties entering into an agreement, and that agreement trades. And that's known as the COMEX gold contract, or paper gold. The problem with that is that there is at least 300 to 1, and it's been up to 500 to 1, ounce of gold versus contract, meaning that there are more contracts outstanding than there is gold in the warehouse. And that could last forever until somebody wants delivery. There are 9 exchanges around the world formed already with excellent rules for delivery and all the particulars you need to trade a contract, but this is a 3-day contract for physical gold. So the price mechanism you've seen so far is easily manipulated because it's counterfeit. If 1 ounce of gold equals 300 100-ounce contracts, doesn't that sort of sound a bit like counterfeiting to you?
Yeah.
And slowly what you're seeing by the demand for physical is the transition of the price setting mechanism. We recently had physical $100 higher than the closing COMEX spot contract.
If you check Kitco, for example, if you check Kitco right now, it's 17 something, and you can't buy it for less than 18, $120 more. I mean, that's the commission.
No, that will go on forever. And it's really a product of the physical gold having been accumulated by knowledgeable, mostly old European families over the last decade, especially over the last 4 years, to the point where the physical is very, very thin. There are no new mines coming online.
Yours is coming on. I want to talk about that in just a minute, your TRX. But but the demand is this is a real deal, and there's talk. I don't know if you know. I know you know all about gold. So there's also talk about the demand for physical is going to blow it up one of these weekends, and it's getting closer.
Well,
How close are we for?
Like that, arbitrage will happen. You can't have physical selling $100 or $200 over paper and not have paper go up. Somebody's going to say, "Give it to me out of the warehouse so I can sell it for the $200 more that it's worth in the physical market." I mean, it's simply by law of nature, human greed. That will happen. There's no way to stop it from happening. And you notice a continuing great names in gold like Makata ceasing activities in the gold markets.
Why?
Because they know exactly what's coming, and they know there's no supply.
Oh, they're not selling it. They've stopped selling.
Well, you can't if you can't get one side of the trade. How do you make the trade? And they don't want to be using paper as the hedge against the physical sale if the contract may not function. I'll make you a simple question. What is a contract worth that cannot function?
Zero. And so you're thinking that we're going to get some big price explosion at some point. People have talked about this for a while, but boy, it sure seems like it's getting closer at 18, 17 and change an ounce for gold. But you're thinking we're going to get one big blow up at least soon.
I'd say the first reset would be 3,500.
The first one, 3,500. So we're going to get some overnight. Friday, it's 1750.
Monday, no problem at all.
I'm sorry.
The second reset will be more, let's say, the vote of the public. Just like you have a car show, you have judges, and they pick one car to be the finest car, and then they have the vote of the attendees to see really what was the most attractive vehicle. That's not. They don't do that in Pebble Beach, but it does happen. And the second reset will be more the return of the forces of the marketplace, of fear and greed, that will set the physical price of gold. And the major traders then, and I used to make the physical market in gold in the day.
Yeah, you did.
Would be China and Russia. And let's just say you called up the major trading entity in Russia and said, "What's the price of gold?" You could get an answer, 50,000 bid, 50,000 offered. What would you like to do? Then you say, heck with that, I'm calling China. China, what's the price of gold? 50,000 bid, 50,000 offered. What would you like to do? And the answer is the price of gold is fixed by the market. And that's the aim that is at the basis of the not investment, but rather political policy of owning gold, because they know there is no way out now but a reset, a rebuilding of a currency system, and a greater function of gold within that currency system, but not as convertible. We go back to Melania and the little lady with the pocketbook example. And this is
Go ahead.
this is 2022 and 2025.
At some point, we're going to get that first reset before then, that $3,500 shocker.
The elite geniuses will have the new currency that only the banks, Cipro currency that only the banks, central banks trade. People can't trade it. Settlement of trade obligations only. You'll have the price of gold in the physical market running still not set, but running between, say, 33 and 36 back and forth, but 35 for all purposes. Then comes the big slam when that doesn't work, because we're going into a long-term economic challenge between June of 2019 and the beginning of 2032. And that period of time will be looked at as almost 1929 to the Second World War.
Yeah. Tough time. Is gold going to be confiscated? Do you think gold will be confiscated?
I think it can be nationalized.
The mines.
I think the gold companies in the United States with assets in Canada, South America, and the United States will be nationalized. And management won't be put out. It'll be something like the bailout of General Motors.
That's your $3,500 ounce gold where they get that at.
Yes, that's correct.
Knowing that it's going to go to 50 or 80 or who knows the moon.
Well, that's why the wisest thing is to be somewhere else, both as a company and as a miner and as a gold holder, because the temptation as the price of gold begins to move to balance the balance sheet of the United States of America. The temptation on the political side that, hey, the gold belongs to only the rich, and what does it mean to the poor man or to the unemployed or to the homeless? Let's get rid of this, and let's nationalize it and bring it into the treasury.
But they won't take your ounces. They won't say, oh, those ounces we've been selling you since 1986, those U.S. Eagles, they're not going to take that back, you don't think?
They're not going to touch, U.S. won't touch U.S. coins, Canada won't touch Canadian coins, but both would touch any foreign coins that held.
So if you're in America, have U.S. coins. If you're in Canada,
absolutely,
have Canadian coins. If you're in Europe, have Philharmonics.
The realm. Coin of the realm.
Coin of the realm.
Okay,
I got it. Coin of the realm. So you don't think they will confiscate, but not the coin of the realm, not U.S. Eagles. They're not going to say, oh, all those Eagles are. I always thought that all those U.S. Eagles we sold you are all illegal now. Give them back. Not going to happen.
No, it doesn't work. And you don't want to mess around with the minds of your voting citizens.
Will they?
Or your voting. Well,
will they at some point just say, okay, tell you what we're going to do. We're going to allow you to go down to a car dealer and take your gold coins, and you're going to be able to shove it across the table for a new Cadillac or a new Chevy or a new truck. Are they going to do that?
No, gold will always, there'll always be a currency transaction between gold and the car, gold and the vehicle, gold and the good you want to buy. You won't be using gold coins to buy and sell things. Oh, sure. I mean, there's always barter could be made, and there's areas right now where, up in Alaska, you might trade a beaver pelt for a quarter of a moose, okay? But in the mainstream, the system will have to continue to run as a system. There'll have to be something like SWIFT.
Yeah.
Money will have to be transferred. We get all caught up in what is money, but just remember that the currency is for transaction.
Got it. Check.
Gold is for maintenance of value.
And it's silver. You think silver will, because people are probably sitting there going, why don't you ask him about silver? Ask him about silver, because I only get you about once every 18 months or 2 years. What about silver?
Well, silver is gold on steroids. Okay?
You're still a big fan of silver still?
Well, when silver goes, it goes faster than gold. But because of the form of the reset and the means by which the overall problem will be attended to, and a new system that actually might bring us back to the beginning, in which a significant world economy can be built. Silver, I don't think, has the staying power because it's too industrial. So it will rise faster than gold. Gold will come into what is fixed, but not by governments, by supply and demand by the major traders, China and Russia. Not by government edict, but supply and demand, bids and offers. I want to sell you 80 so many billion. Thank you very much. I'll take it. How's your market now? 50,000 bid, 50,000 offered. What would you like to do?
How about silver?
Silver, I don't have a price for because it is not as clearly knowable.
But not $15 an ounce.
But it is. Oh, it's going to rise sharply. It'll go well above the hunt high. Okay. But I can't put my finger on what that is, and I don't like to unless I'm absolutely sure of what I'm saying. I'd rather not say.
Would it be?
It's going to be extremely profitable for the silver holders.
Would it be hundreds of dollars? You think maybe if gold is
why not
$3,500? What does silver do? $100, $200?
Silver goes into the hundreds.
Hundreds.
It will be over 100 at that time, sure. I mean, because there's more people trading it. It's more action for the public than gold would ever be. But it has the ability of rising faster and falling faster.
Okay.
This is a time when gold will not come down.
It'll go up, it'll stay up.
When it goes into the second reset, it will be absolutely fixed.
It's silver, when it goes up, it will go up and then come down, but not back to $50 an ounce.
There's a mix between monetary attraction and industrial usage.
It'll still be pretty much higher than it is today.
Jewelry to gold, come on, it's not what gold is. Gold is something entirely different. Gold has had a characteristic of being able to maintain the buying power for thousands upon thousands of years without changing at all. At all. And silver has a monetary characteristic because, pound sterling didn't get that name sterling out of nowhere. The silver has a monetary characteristic, no argument. But it also has an industrial characteristic, argument. And industrial characteristics for silver have substitution prices. Because at certain points, silver can be substituted for other less expensive metals and materials to do basically the same thing over the majority of industrial usage.
Okay.
So there are two characteristics involved, but it is on steroids. When gold really shows the public that it means to get going, okay? And it's starting to show that now. Silver will be like a Saturn rocket. It's just the nature of the game. It's been that way all the time. It's not going to change. But understand that the basic of what you're going to use to correct the situation at hand, the dichotomy, if you will, between the event of a horrible epidemic, at the same time, the basic foundation of the monetary markets were exploding. Again, with debt much higher than it was in 2008 and 2009, and therefore with a problem much greater than it was in 2008 and 2009.
Do we default on our treasury bonds? I mean, they're talking about how China could sell our treasury bonds.
You can't do that.
Not going to do that.
You can't.
Not going to happen.
If you default on any bond, you default on every bond.
Okay. All right.
What other country would hold your bonds at all? Who would hold them anywhere if you defaulted on any of them? You can't do that.
TRX. Nobody. It's always said that you can't just open up a mine in a year or two. I mean, open up a gold mine. You've been working on your Tanzanian mine outside of America, might I add, and without China involved. That you've been working on TRX for a long time, and I know in the pre-interview
it's been 9 years.
Almost a decade
in the process of production, meaning what you have to do to produce.
So tell me about what's going on with your bringing something on. I mean, it took you 9 years.
Well, you know that I owned, at one time I financed the Bulyanhulu mine, which was a quintessent mine on the planet from green fields, meaning the beginning, nothing there but bushes, to advanced exploration, which is right before production. And that was a great piece of good fortune. All the people involved did very well, and it became the quintessent new mine on the planet. And eventually it was sold to Barrick, and the new Barrick, the result of what I think is a reverse takeover between Randgold and Barrick, with excellent new leadership, just paid over $1 billion to settle controversy that was brought on by the producer, not by the country. And all the evidence required is in public domain for that. It's just a fact. Ever since that, I look for the same thing, if there was another same thing. And Buckreef, in the same greenstone belt, that's the same host, as Bulyanhulu, seem to have geological similarities that couldn't be ignored. So I personally invested $31 million into bringing that out of greenfields and with friends, family, and some investors into what is now, it's production. The plant is being run dry right now, or goes in it next week.
Wow.
Public knowledge.
Do you have, Bill was telling me, who was going to be on this call, he was telling me that you have Price Waterhouse doing the bookwork on it.
We've retained the services of Price Waterhouse, which is a compliment to us.
And they've done the due diligence and...
To the absolute extreme.
Okay.
I mean, it was agonizing. And their purpose is for the building of the entire project. You see, we have two plants, one that does oxide and one that does sulfide. And we have now, between geological and the highest class reserves and resources, somewhat over 4 million ounces. and we're down 950 meters drilling, diamond drilling. That's 950 meters. That's a lot of feet, thousands of feet. And we're still hitting mineralization, which is common to the form that Bulyanhulu took. So there's a very good possibility that our underground mine, we know we're going to be open pit and underground, but we don't know to the depths we'll go underground yet. But there's every indication that the mineralization that we're hitting, which is now being come through analysis and very pleasingly so, is going to give us a very deep mine, and the contest will be.
Oh. Well, I don't know how that got cut off. I know it was a long interview, but listen, Jim Sinclair, they're very close. You can go on hold on just a minute. It's hey, you there? Yeah, what's the website again? Hello? Tango. Okay, Bill Holter's listen to the interview on the other line. TanGoldCorp.com. I'm not going to be able to get Jim back for some reason that the thing cut off. But listen, everything's on TanGoldCorp.com. This has been a project that has been in the making, as Jim said, for 9 years. And, that's just an unbelievable, as demand has risen to, pretty high levels, the highest in probably a decade or maybe more, maybe the highest ever with what's coming down the pipe. That's an important thing to be on. So if for more information for Jim Sinclair's mine, Jim and Bill Holter, I think, is also involved, TanGoldCorp.com is the website. I'll put the links on after the interview, and I'm sorry we got cut off. That's just a Skype thing, but Jim Sinclair, thank you so much for joining us.com. Bill Holter on the phone, he was listening in, and I'm so glad he was because, it helped me out. I got that right, TanGoldCorp.com. That's okay, I got it right. It's TanGoldCorp.com. Of course, Jim Sinclair at jsmindset.com. The website, that's separate. That's for news and information. Wonderful site. They also have a sign up. Jim and Bill get together weekly with a wonderful talk about what's going on in the economy, the minefield that we have now, which is getting worse. You heard about saw Jim. But anyway, listen, it's jsmindset.com. That website links will be there. The sign up page for the subscription service will be there. TanGoldCorp.com is the website. I'll put a link up for that if you want to know more about that. Jim Sinclair, thank you for joining me on USAWatchdog.com. There's Jim calling back now, but thank you so much for joining me.